Hey traders, this is Blake Morrow with Trader Summit, and it is Friday, so I've got Jim Welsh here from Macro Tides. Jim, how are we going to break down this market action? I mean, S&P is still holding above 4,100. We had a nice rally, into last week to 4,200, pulled back a little bit. What are you making of all this mess?
Well, we're going to go through some charts,
which
will shed light on the morass that we're in. But that'll be, I mean, you want to do it right now since you brought it up? I mean, we can do that.
Yeah. Let's go ahead and let's talk. Well, you want me to go ahead and get into your first
the S&P futures. Just one prefacing comment. Obviously during the day, the S&P futures and the cash trade like they're more than cousins. I mean, they really are in sync. But when you get into the overnight sessions, what happens is there can be a disconnect where the futures have a big move overnight. That when the market opens, if they've recovered, the cash, it doesn't show up in that chart. And that's what happened on May 30th. The futures all the way up to 4202. The cash on the 27th, which was Friday. So the 30th was, we had a holiday, right? On the 30th, only got to 4158. So in the June macro tides, which I kind of rushed and sent out on May 31st, I was looking for a move above 4202 in the cash because I assumed that high at 4202 in the futures was going to then translate to it going up above that level, which obviously would have carried the S&P futures above 4,200 or cash above 4,200. So instead, we got a pullback, and you can kind of see on both the futures and the cash, because it happened during the day for the most part, they mimic each other. And there was lows around 4,067, 68 in the futures. And 1,074 in the cash. Now, here's the thing I want to point out. If you look at this chart in the futures, you can see from the initial low, you had choppy move up, sharp breakdown, and then we had the big move up into yesterday's high. But that's an ABC up. So what that starts to raise the potential here is that the high at 4202 was the high of wave 3, and we're doing a big ABC with yesterday's high being the B and today's sell-off being wave C, which should take it down to the lows of the last couple of days, because the futures came up about 11 points shy. So the high yesterday was 4191. So, theoretically, we should undercut that low at 4068.
So somewhere down in this neighborhood.
Yeah, not a whole lot lower than the lows of the last handful of days, but that could be a bigger wave 4, and then we get the move above 4,200. So we're kind of at this no man's land stake because, one thing I want to comment on is that if one can identify the top of wave 3 in any big move, it's always, I think, a good idea to lighten up on a position, because one or two things happen. Wave 3 could be nothing more than an ABC. Now you're going to get a much bigger pullback. The second reason, which happens often when you're in an uptrend, you get a peak for wave 3, and then you go through a protracted choppy period for wave 4, and it's aggravating. Kind
of what we're in right now.
Kind of like what we're in right now. At the same time, the market has the potential of puking here. I mean, that's why I wrote in the expectations that back on May 20th, that we had the potential for a low and a rally above 4,090, and then potentially between 4,150 and 4,200, there was a lot of resistance, which is the red horizontal line. Yesterday, the S&P got up to 4,178. So if you step back, you can kind of say, wow, that looks like 5 up. When you look and focus closely, you can kind of see, again, just like on the S&P futures, the S&P made a low on Wednesday, bounced, made a higher low yesterday by a very, very small amount. And then we popped up. So again, you have the 3-wave move that in the futures hit a lower high than on May 30th. On the S&P cash, we took out the May 27th high. So I can interpret this stuff really either two ways. A, we're going to go down to below 4,074 by a small amount and then rally above 4,200, or you've completed 5 up that completes the ABC low from 38.59, and now we're going to new lows. So, I'm
I'm gonna play devil's advocate. What's gonna pull us down there, Jim? Is it gonna be what would it be?
Well, again, I think earnings estimates are going to be coming down, and the news out of Microsoft in terms of the impact of the dollar,
sure,
said the same thing. So in terms of the S&P, those companies, 40% of the revenue comes from overseas. So Microsoft is a higher number. And my point is the dollar strength, I think, is a factor in terms of impacting earnings, as we've seen with 2 very large companies. The Fed isn't going to back away. And I think, what we saw, this big move up, was on speculation, hope, and prayer that, oh my God, the Fed may pause in September or downshift to 25 basis points. And again, and now we should look at Brainerd's comments.
Okay.
Because, Bostic is the guy who raised the idea that, well, by September, I might be willing to downshift. And immediately people said, well, it could pause, which that was never in the cards, in my opinion. And Bostic is a non-voting member in this year and next year. Immediately on Monday or Tuesday, I think it was Tuesday, Waller, who is on the board of governors, so he votes at every single meeting all the time, he pushed pretty hard against the idea of pausing. All right. Brainerd yesterday was interviewed on CNBC, and the theme after her interview was, boy, she was pretty hawkish. Now, this is what she said. If we don't see the kind of deceleration in monthly inflation prices, it might be appropriate to have another meeting where we proceed at the same rate. In other words, 50 basis point increases. And then she also said, if we're seeing deceleration in the monthly prints, it might make sense to be proceeding at a slightly lower pace. So Truman famously said, I'd like to have a one-armed economist, because he said, they're always saying on one hand it could do this, and on the other, the economy might do that.
Yeah.
So this is a perfect thing. Now, what I wrote in the June macro tides was that the Fed doesn't want to have financial conditions tighten too much, but they don't want to be locked in with the markets thinking, oh, the Fed's going to do something in September. So they're going to be data dependent, which everybody's been talking about in terms of Brainerd and her comments. Hey, we're waiting for the data to tell us what we're going to do. But my point was that they would casting some doubt about downshifting at the September meeting while not ruling it out. And that's kind of where we're at. They don't want to have people thinking that they may downshift in September. They don't know what they're going to do, Blake, at the September meeting. They are more data dependent than ever. So today's jobs number came in pretty good. Wage growth, especially for non-supervisory people, was like 6.2%. The media is talking about the 5.2. Hey, those numbers are still really, really big. So again, I think it's just going to depend. I think inflation is going to ease off a little bit. We're definitely going to see signs that the economy is slowing. But I think it's premature to say what the Fed is going to do for certain.
All right. Well, what's that going to do to the dollar? I mean, we got the ECB next week, so
yeah. We had the dollar was stronger than I expected. To be fair and legit, and so you had to rally up to 105. We had this pullback. I think there's a potential that this pullback is wave A, and that we're going to see an ABC up for a B. And ultimately, I think the dollar index is going to drop down towards 99.50. Now, this move is going to take more than a handful of days to unfold. And the ECB, I think, is going to begin to sound more hawkish. That's why the dollar, I believe, sold off in the first place, is they've been extremely dovish. The Fed has been fairly hawkish, and now they're kind of evening those scales. So they're going to, I think, follow through on what they said. So I think you've got an ABC up for a B wave here that, in other words, the dollar will bounce a little bit more. And then I think there's another leg down that takes it below 100, probably closer to 99.50. And I think potentially the dollar's going to higher highs.
Okay, so let me just mention this. We've seen this just at the end of the week here. The S&P has come down from 4,200 to 4,100 basically, and the dollar has not been able to muster any type of rally in this downswing. So it's not catching that quote unquote
fear bid.
Yeah, that fear bid, that risk off bid. So is it possible that this is just a consolidation before we head lower?
Well, I basically I agree with that. It's the question of, are we going to get a bounce above the high from in the last 2 days to complete an ABC up before you head lower? So I'm on the same page as you. It's just, are we trying to dissect the very short-term squiggles?
Yeah.
But, we've been talking for a couple of weeks about the dollar. My comment has been, I think it's going to 99.50. So it's just, okay, we're going to, and the decline was pretty sharp. It was, about 4.5 points or roughly? I haven't done the calc. Yeah. So if you go to 99.50, that suggests you could bounce to 102, 102.5, maybe 103 even. Yeah. Maybe the ECB, doesn't sound, in other words, gee, they're not as hawkish as they seem to be talking. You never know. And you never know.
Yeah, because that brings us up. That brings us up to the euro, right? Because the euro is all going to be dependent on what happens next week. Yeah,
and so again, the expectation was it would drop below 104 as for things we discussed for 2-3 weeks. Last week when we talked, it was around 107.50, and to me it was like, hey, you got to kind of take some profits here. And again, it's kind of like, if you can sell into strength and kind of guess sometimes the high of wave 3, it's just easier because then you go into a wave 4 and it just becomes aggravating. So I think, the euro will have another push higher, test that trend line up near 108. But if the dollar drops to 99.5, that gives the euro that ability to pop a little bit more. And then if the dollar then begins to resume its uptrend, obviously the euro is going to have issues.
Yeah. And I mean,
short term, it's going to be tough right here, I think.
Yeah, it's kind of pivotal, right?
Yeah, it's just choppy. I mean, again, to me, the idea with all this stuff, Blake, is to try to identify important swing areas. I mean, if you're a day trader, you can have 2-3 swing areas in a day, but more for, over the next 2 to 3 weeks type of stuff, things getting below 104. There were a lot of things that you brought up, I brought up in terms of, hey, a lot of things are coming together to anticipate a rally above 107. And as you noted last week, that's a heck of a rally in about 2 weeks time.
Yeah. I mean, it was what, like 4 big figures pretty much. Yeah. Plus, that's a big move for currency pair.
And in a short period of time.
Yeah.
If it has 4 months as opposed to, 2 weeks, it's a different animal. So I just think, again, when you can identify 3 waves up, it looks like it's rolling over. It's always time, if you can. There was, chart resistance up around 108. So again, selling into strength when you can, a portion of a good trade always, to me, makes sense.
Absolutely. So what would be the catalyst to drive us above 108? Is there anything in particular you're looking for as far as the ECB next week?
No, I think they just have to really continue to talk tough.
Because they're not going to move. They're not moving next week. They're going to open the door for possibly a move in July, right?
Right. Which I think says potentially there could be a measure of disappointment. Maybe there's some people out there, there's a lot of people who think they understand monetary policy who don't. And so to me, it's possible that they talk tough And there were some people thinking that they were going to either talk tougher or they were maybe going to do something. And so there's disappointment. And the euro has a dip, the dollar does that ABC up, and then things roll over. Again, we're going to see more weakness in the US economy appear. And that is not a positive for the dollar.
Okay. I was going to say, well, if we have more weakness in the US economy, you say it's not positive for the dollar, and actually it could end up being more bullish for stocks, because if the economic activity or data points continue to weaken, that's going to maybe encourage people to believe, whether it happens or not, that the Fed might be a little bit more dovish, right?
Right. I mean, I'm looking to buy the next pullback in the market. I think we had this pullback under the lows of the last couple of days, and then potentially a move above 4,200. If that move happens, I'll be looking to buy the next dip. It could be, again, down to 4,050 to 4,100. In other words, a deeper dip, because you're going to retrace the whole move from 38.10. So let's say if it got to 42.40, I'm just making that number up. That's 430 points. You do a 382. You're north of 150 points off of that. So, for the exact reason that you just cited, Blake, is although Brainerd pushed back on the idea of moving in September, people want to believe that. And if we get some more data showing that, hey, the economy is slowing, they're going to keep holding on to that idea, which implies that I think the market will want to try to rally during the summertime. Now, the real test could come, and the real kind of the blow to the head is as we get closer to September, and all of a sudden, geez, it looks like they really are going to go 50. That's what we have to be on the lookout, because of what you just talked about is people are going to continue to tilt toward, I think they're going to ease up in September. And no matter what they say, I think they're going to do it, And then if the data doesn't come in appropriately, and they determine that, we're going to go 50. And of course, they'll be talking about that late August, because I think it's the September 27th meeting. The blackout period then would start September 17th. So in that first half of September, if the odds are they're going to go another 50, they'll be talking about it.
Yeah. I guess we'll have to cross
September, but they'll use language that you can reasonably infer that they're setting the table for another 50 basis point hug.
Got it. Well, Jim, I think we got to take it one day at a time, and it almost seems like one day at a time. And listening to these Fed governors and regional presidents from all over the place talking, giving us a little bit of mixed messages, keeping the markets on our toes. But I've had some comments on the YouTube on your YouTube videos. Some people really commenting, Jim, you got to see them, that they really appreciate your views and your Elliot Wave counts. And if you guys and gals are watching Jim at home, make sure you give him a thumbs up and tell him how good of a job he's doing. Jim, if I want to find out more about you, how do I do that?
macrotides.com. And I do and have, for faithful listeners of Trader Summit YouTube videos, I'll provide probably next week's weekly technical review, complimentary, to those who request it. The best and easiest way is jimwelshmacro@gmail, and I'll make sure you get it. Kind of a vote of appreciation for their allegiance in tuning in.
All right, Jim. Well, thank you very much. And we appreciate your allegiance for being here every Friday. I hope you have a great weekend, and thanks for joining us. I'll see you next week.
You got it, Blake. Have a wonderful weekend.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.